The company also naming Chief Operating Officer Joshua Kabza as its new CEO. Joining us to discuss all of that, as well as his outlook on the consumer, is Restaurant Brands International Executive Chairman Patrick Doyle. You all know him as the wizard behind the incredible outperformance of Domino's Pizza last decade. Patrick, it's a real pleasure. Thanks for joining us.
Thanks, Kelly. Appreciate you having me on.
I went back to look at the stock performance. I don't need to remind you, I guess, but Domino's went up 23-fold from 2010 to 2018 with you at the helm. So if I were RBI, I'd be feeling pretty good right now saying, okay, and you were doing tech in pizza before anyone was talking about, tech across the economy. So do tell, look, it's a challenged company. It's made it's not hiding that. They're trying to bring back the flame or whatever we're calling the initiative at Burger King. Make the case for me, and I know you are probably one of the biggest shareholders as well now in the company. How do you get this stock up consistently, especially with the potential consumer slowdown heading our way?
Yeah, thanks, Kelly. Well, it's a couple of things. First of all, the thing that the four brands have in common is I truly believe all four of them have the best food in each of their categories. The Whopper is amazing. The chicken sandwich out of Popeyes, Tim's coffee, and and Firehouse has terrific subs. So you start with great food at all of these. And then what you need to take that to is, also giving a great experience, getting the pricing and promotion right, bringing digital in, which, certainly was a big part of what happened at my old company. But then the other thing that we announced, I think it was very important today, is we're going to start releasing our franchisee four-wall EBITDA. So the economics of the units are ultimately what drive growth in your restaurant counts. So if we've got great operators who are committed and we deliver to them great unit economics and they're confident about the future from the investments that they're going to make in more restaurants, you're going to generate growth, which is ultimately going to generate great returns for our investors.
How do you get the magic back a little bit? I mean, all of these, and again, Popeyes has been very successful in that regard. I don't want to downplay that, but Tim Hortons had a little bit of a skid here with its U.S. launch. Burger King spends a lot on marketing, but the brand perception has fallen throughout the years. So do you restore that through marketing spend? Do you try to go, are we talking about TikTok influencers? Do you think just people have to give it a chance and they'll see that things are changing? How much and where is that investment spending to really get people back in the doors?
Yeah. So first of all, Tim's, which is Canadian based, is an unbelievable business and brand. And, they may have had a little bit of trouble during the pandemic because, as a coffee based, morning based brand, which has been expanding into lunch and dinner,
sure,
losing those commuters certainly hurt, but the business is coming back very strongly. So Tim's is in great shape. Popeyes is in great shape. Firehouse still relatively small. The international business has been booming and a great team there. So really it comes down to BK in the U.S. and the Reclaim the Flame program, which combines our investments into more marketing dollars, investments into upgrading technology in the stores and to reimaging those stores. Also with a real emphasis on improving the guest experience, which I think our customer satisfaction was up 20 points from the third quarter to the fourth quarter. You do all of those things, you're seeing that we're starting to generate growth. The advertising that's out right now for the Whopper is terrific and really breaking through. It gives me confidence. We've got work to do. We've got some franchisees who have some balance sheets that may need to be cleaned up a bit. We'll work through those things, but I'm confident we can get there. And honestly, the rest of the businesses are overall in very good shape.
Firehouse, I thought, was maybe a recent acquisition. I'm not as familiar with it as a customer, but there is another pretty famous sub-chain that apparently is up for sale right now. Would you be open to adding Subway to the portfolio and or any other targets? I mean, why stop at 4?
Yeah. So first of all, we've got plenty to work on right now. So I don't think that's in the cards anytime soon. But Firehouse is our brand in the subspace. We love the food. We love the opportunity there. Lots of growth ahead. Subway is a very, very different situation there. And, it's a big brand, big business already. I'm not sure that you've got as much growth ahead just based on the scale of the business today. So we're much happier with Firehouse with the growth trajectory ahead by building out that brand, both in the U.S. and ultimately around the world.